everybody. Welcome to the Tuesday edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. It is Tuesday, the 10th of July. Those of you new to the channel, make sure you click that subscribe button down below so that you get the updates as they happen. We look at the same 10 to 12 futures markets every day, identifying potential breakout trades as well as turning point trades, leaving the lines on the charts so that we can be held accountable to the trades that we identify. The idea here is consistency is what we're looking for, trying to look at the same markets every day. So let's dive right in. Starting first with the S&P. So looking at the S&P, I've had this breakout position for a long time. Let's just put it that way. This 2,800 level on the S&P has been a thorn in the side of the market for a while, and it's been unable to pierce that level. And really, we can go all the way back to that line started way back in here in this area back here. And so the fact that we've been unable to pierce the level, not that big of a deal. Last night, I was actually looking at this, and I said, well, if we pierce it on the straight on the way up, then your stop has to go way below the last pivot, so down here. I actually like the fact that we hit it and rejected it in the overnight hours. I'd love to see us do some basing here just before, and then it would be a better opportunity to get long. In the meantime, there's this little area down here. Now, remember, this is the 4-hour chart, so I got to move to the hourly chart, and it'll be easier to see. There's this little area down in here where we chopped along sideways before the rally that kind of kicked off the day. So there's both of these areas that are available. Now, when I look at this same area in the Nasdaq, I've got a lower one here for potential reversal point in the Nasdaq. So, there could be a decent little reversal trade in one of these areas here. I'm not going to mark them as of yet, but I will look at them as price gets to them later today. Because if we do get a bigger pullback, maybe possibly this range right here could be the chance for a reversal to get back in. We're a little overextended on this move up at the moment, but that's not to say that it can't continue its move higher. And I love the fact that we rejected off this area. If we come back up to it, the more basing we have in front of it, the better it's going to be, and it allows us to have a slightly tighter stop. Nasdaq. So now one of the reasons we're rejecting in the S&P is because we've hit this area in the Nasdaq. Now this area in the Nasdaq, I had a short set up. Price has come into the area. We didn't even pierce it by a tick, so it's not really that big of a deal up here. What's more interesting is that we've been unable to really fall out of the level. And if we do, there's not a whole lot of profit potential in this move. So this one may be one that if you're still in it, it's time to lick our wounds and walk away, or just let it play out. And if it goes up and hits your stop, and so be it. It's a fairly small level, but going forward, we can't use it because we traded all the way to the very top of that area. So that level is no longer going to be valid. As far as a place to get back in, once again, we've got a very similar, subject of down in here, there could be an opportunity. Could also be right here at this little level. Right through here. So both of those are areas that could be valuable areas. Once again, I'm not going to mark them because I want to see how we arrive into those zones before I'm willing to commit anything to them. Crude oil. So in crude oil, we have an area that I've identified a while ago as a potential reversal point. Not come to it yet. We are putting in slightly lower highs here in crude. These couple of highs were a bit lower, but we actually just put in a new higher high here on the hourly chart. So gaining back a little bit more momentum. I believe, and I said this a long time ago, I thought oil was going to 80. So if somebody were to be long oil coming out above this breakout, I would not be opposed to somebody getting long oil above that area. Gold. This was one of those ones where you feel good about it when you enter the trade. You're like, yes, here we go, skaboom, and here we go, and we start moving, and price then hits the opposing fair price value area, which is up here, and and then falls hard off of that level. So we did get the breakout in price. We were unable to hold that breakout. And yesterday in the video, I talked about taking your stop and moving it to break even because we had broken, but there wasn't a lot of follow through. So now, as we've kind of put in this lower swing high right here and a lower swing low, we've changed our trend direction by getting lower than this last low. So that tells me that I'm more apt to be a seller if price does indeed return. Now, I don't know if it's going to return all the way back to the origin of the drop. So I'm going to go, and it's really a 15-minute level. If you're so inclined, this is a tiny Witte level, as Elmer Fudd would say, a tiny Witte level, right here, where we've, I guess you could really make it a bit bigger because that's a little too small. This area right in here, it's very small. You've got a very small amount of risk on this, but it does give you the opportunity, if this is the beginning of a bigger leg down, a chance to get short if we come back up into it. Now, if I move that back to the hourly chart, you'll see that's not a very big pullback to get me back in. All I need is a few hours of a rally back up in here. And that could go in line with the S&P just falling for a little bit early in the day. Looking at the bond market. So yesterday in bonds, we talked about this this triangle pattern that had kind of been forming, and we have bounced out below the bottom of it. So once again, and look at how it rejected the breakout. I mean, just rejected the breakout and then came down and hit here, and it's continuing its move down. So some of you may have grabbed that short. If you did, it's time to take your stop and move it down. I would say to above this pivot that we just put in, right around the European market open, and adjust that pivot and move it down to lock in some profits. In the Aussie, now in the Aussie, we came up and we made it all the way in, which means we triggered the trade. We came back down in, came back up, and now the entry has occurred because we broke below it for the entry. So now this Aussie trade has begun its move down. I would take your stop at this point only because we've got a fair amount of fair price value right next to us, and your stop, I would say, goes here at this point because you want to lock in, you want to reduce that overall risk now, take it down to here. You've got some opposing fair price value area right here, so this may not be your full profit target, but at the very least, move your stop to reduce that exposure as it's kind of moving down. Although I wouldn't be opposed to somebody even moving it down to a break-even point from here. You know, if you're at 1-to-1 and you move it to break-even, that's going to be okay. Next, the euro. So the euro we had very similar to gold, where we had the breakout to the upside, and it broke out and then it pulled back a little bit and then just kind of continued that move, making you feel good and happy, and it came right to the prior high, and then now it's sold off ever since. So I'm going to remove this breakout position. So some of you may have taken some profits in the move. Some of you may have at least moved your stop to lock in some gain, but now we've put in a lower swing low as well as a lower swing high. So our trend direction has officially changed. You know, we've come back up to the top of this where we were before the ECB meeting, and so this is really what we've got to get through before I'm a big believer in much more of a long. But by breaking up through there, you got a little bit of a push, and now it's kind of coming back down. So you could get a reversal trade at this point. My fear with a reversal trade is that we've hit this hourly fair price value area where we believe that there's going to be some buy orders in place. Now, this could just cause us to thrust back up into here. I didn't have that set up ahead of time, so if you are so inclined, you can candle-to-candle trade that style right from here. Canadian dollar. Now, this one, price came up. It did not hit my opposing fair price value area, which was up in here, before then coming back down, chop, 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 and then falling off the radar. This one, at the very least, you'd probably have moved your stop up to break even, but this one did not hit our profit objective. And so, this one, depending on your trading style, you may or may not have taken some of it off the table, but probably stopped out for a break even on this one. And that's really what we're looking for, right? We've got between the gold breakout, the euro breakout, the Canadian dollar breakout. One of them has a stop out for break even. The other two have small profits. None of those were strong runners, but you will occasionally get those strong runners that you can then lean on. Last, certainly not least, Great British Pound, Japanese Yen. All right, so let's start with the Great British Pound. This one, completely wrong. I mean, I just missed the boat on this one. As a matter of fact, I couldn't have missed the boat any more than... I guess the Great British Pound just completely fell right through here, broke right through the level where I had anticipated a strong reversal. I really felt like this was a pretty good reversal. I liked the arrival into the level. I liked everything about it, and sometimes that happens. So small loss on that Great British Pound position, no doubt. In the yen, I'm going to add this level here to our list. The reason I like this is because this area here was an old area of support, and there's a psychological piece to an area of fair price that was an old support line. And so that psychological piece is important going forward if we do get a rally back up into this region. In copper, we broke above the level I'd spoken about yesterday. I did, however, say, well, you can either get long above here or short below here, and it popped up above. Now, I will tell you, I had no intentions on taking the long popping above, simply because everything about copper has been saying bear, 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 bear. So even though I had this level drawn and identified, I did not have anything set up around it because, there was no definitive reason to put anything in for a long at all. So I did not have it set up ahead of time. Still think maybe you could get a short below this breakout area if you are so inclined. You could also possibly take, if we do get a reversal back to this region here, if price comes back up. All right, everybody. So that's all I have for today. If you've got any questions, please feel free to send me an email, chuck@iiefinancial.com. And until tomorrow, peace out.